It's just 2 days since the Reserve Bank handed down the first interest rate cut since 2020, but some economists have questioned that decision, especially in light of Australia's historically strong employment market. Today, we get more information on that with the employment numbers for January due out very soon. Business Editor Ross Greenwood is with me this morning. Ross, good morning to you. It's that run of good jobs number expected to continue.
Well, it is. It's going to be continuing to be strong. And the real issue here is just how the Reserve Bank interprets it. At one stage, the Reserve Bank indicated that the unemployment rate would get out to 4.5%. And that would really trigger interest rate cuts in Australia. The real issue is that over the previous months, the unemployment rate has actually fallen and not increased. At one point, it got out to 4.2%, seemingly headed to that 4.5%, but then dropped all the way back to 4% last month, 3.9% in November. So these are the January numbers that we're seeing at 11:30 Eastern Time. We'll bring them to you live here on Sky. Money markets right now, and economists that have been surveyed, indicate a slight tick up in the unemployment rate. So they're indicating that the unemployment rate will tick up from 4 to 4.1%. So that is a really important thing, but it also gives some small indication that if that bears true, it gives another reason for the Reserve Bank to have cut interest rates when it did on Tuesday. So this is all part of the rhetoric, but the one good piece of news for the government in particular is that a lot of people have jobs. And it's hard to sell this for government because, you know, if you suddenly say, well, more people have got jobs, the reality is people don't know whether it's their job that would have been lost if unemployment had gone higher. But the reality is if unemployment had gone higher, then the interest rate cuts would have come sooner and would have certainly been much sharper, Holly.
Yeah, it is a hard sell for the government, isn't it, Ross? I mean, what does this say, though, about more possible rate cuts in the future? That's what everyone wants to know at the moment.
Yeah, well, you get a sense that the Reserve Bank in some ways has possibly taken itself out of the election campaign by cutting interest rates on Tuesday. Now, as we point out here, many economists were saying, well, there was really not a lot of changing evidence to give you the indication. But here is Money Markets this morning saying that in April, which is the next time that the Reserve Bank meets, probably right smack bang in the middle of the election campaign or towards the end of it, it's suggesting an 86% chance of a hold and a 13% chance of interest rates being cut then. So not much of a chance of rates being cut in April. But if you look further forward into money markets, what you see there is a suggestion that there could be 2 more rate cuts this year. Part of the reason is this: wages. So on a quarterly basis, wages were up by 0.7%, but on an annual basis, at 3.2%, and that's significantly lower. So in other words, if wage increases are starting to come down, particularly you can see it in the public sector, but also in the private sector as well, then what that means is it takes another inflationary pressure away. So the one thing about people with inflation saying inflation's beaten, of course it's not beaten, because if you turn up and get your groceries this week, they're probably likely to be exactly the same as they were last week and the week before. But the fact of the matter is the price rises, the very steep price rises are starting to come off both for wages but also for prices as well.
And Ross, what about the markets more generally? How do you think they'll open up today?
Probably lower based on what happened in Wall Street overnight. We can show you a little bit about the expectations here. Effectively, if we have a look at the share price index of the top 200 stocks on futures markets, down by almost 0.5%. The stock market here has had a terrific run in recent months, but it now has started to just come to the end of that, especially with a lot of bank shares being smashed over the past few days. We're going to see results today. A few of them: Wesfarmers, Tabcorp, Telstra already out. ANZ quarterly numbers as well could have an impact on those bank shares. Here's the Australian dollar, which has picked up since that interest rate cut, largely as a result of a decline in the US dollar, currently sitting just a little under 63.5 US cents.
Okay, Ross, thanks for your time this morning. We'll see you soon.